The US stock market has entered the bearish territory as investors fear the economic fallout of the COVID-19 outbreak. With the way things are unfolding, we may see a picture that turns out to be worse than in 2008. This week, on Monday, Wall Street suffered its biggest single-day drop since the 1987 crash, as the coronavirus pandemic forced investors to confront fears that a recession may already be underway. Although the S&P 500 rebounded on Friday, that did not help the index to erase the weekly lows, which totaled 10.3% by Friday's closing. The index extended losses this week. US President Donald Trump said that the virus outbreak could last until August or later, and that it may be that the country already is in a recession. The market continues to nosedive came despite the Fed Reserve's emergency cut in its benchmark interest rate to near zero and other actions on Sunday intended to stabilize the markets and keep credit available to businesses. Meanwhile, Friday marked the Dow's biggest ever point gain. It ended at 23,185.62, posting a 9.36% intraday rise and clawing back some of its 11.2% weekly collapse. However, it continued the downward trend this week. According to analysts, the Fed's auction can't stop a sudden slowdown in consumer spending because many stores are closed and people are suddenly out of work. The Wuhan coronavirus threatens to disrupt economic activity and corporate earnings. That combination could trigger a steeper fall for the major stock indexes. In the meantime, the Nasdaq Composite closed at 7,874.88, posting a 9.3% rise for the day, but a 20.9% loss for the week. On Monday this week, the tech-heavy index fell by 12.32%. Energy stocks have been among the hardest hit in the last 2 weeks, so have traveled related stocks along with retail and financial stocks. Many have seen half of their value or more wiped out so far this year. Even the stock of Amazon.com, which has seen a surge of online orders in recent days amid the virus-induced turmoil, has stumbled by 14% in the last 2 weeks. Although Amazon posted a 6.4% rise on Friday to close at 1,785, it still logged a 7.2% fall for the week. Amazon has missed earnings per share estimates in 2 of the past 3 earnings reports. Hopefully, the company said it will hire 100,000 workers to assist with the online deliveries in the United States and raise the minimum pay to at least $17 an hour through April. However, in the longer term, the downside risk for its stock price is significant, analysts say. Meanwhile, Microsoft stock soared by 14.2% on Friday to end at 158.83. Still, for the past week, the tech giant posted a 4.4% fall. This week, it resumed the bearish trend along with the broad market, losing 14.7% on Monday, its worst single-day plunge since 2000. The stock has lost 27% over the past months. According to some analysts, Microsoft still needs to fall another 20–30% before we can talk about the strong fundamental resistance. You're watching US Stock Market Review on InstaForex TV channel. Subscribe to our channel and keep abreast of the latest events with us. We wish you profitable deals.